Hi, welcome to the Market Alert for Wednesday, the 26th of February 2020. So bond yields crash to record lows as stocks suffer worst breadth since dot-com collapse. A complete bloodbath for Tuesday. As Monday we saw the market down 1,000. Yesterday the Dow finishing down another 870 points, which we'll take a look at now. We'll start off with the monthly chart actually. If you look and see from March of 2009, you can see the market's put on 23,000 points. So to lose 1,800 over the last couple of days is no big deal in the grand scheme. In fact, in August 18, when the Federal Reserve started tapering the balance sheet and offloading the balance sheet, the market didn't like it at all and fell sharply. They then came in and said, actually, we're not going to taper anymore. We're going to carry on printing, and the market then managed to move higher. So 1,800 points down, as you can see here. Just to reset the chart, isn't a great deal, as I say, compared to where the market's actually come from, 6,000 to 29,000 in that range. However, when you start to look at the detailed out, it starts to become quite frightening, particularly when you look at the daily chart. So you can see the market there having sold off for the last 2 days. It's no surprise, really. This is long overdue. However, they're going to do whatever they can to try and bring stability to this market. The Fed will do whatever they can. The problem is, it's slightly out of their hands. They can't control. They've had full control for the last 11, 12 years. And with the coronavirus now spreading at exponential rates around the globe, the problem is they can't have any control over it or stop it. And with factories shutting down around the world, lockdowns in Italy, as this continues to become an issue, it's going to have a major impact on the economy globally, particularly, as I was saying yesterday to someone about this. So there's an inflation aspect as well, because if China is shutting down factories and you can't get car parts, that's going to start attracting premiums. It's going to start increasing inflation. The more factories that are closed down in China, the more difficult it is going to be to get certain goods, cheap goods, and the knock-on effect is going to be considerable if this continues, let alone the travel industry, the hotels now that have got coronavirus. Nobody's going to want to stay there. It is quite a serious thing that's gathering some sort of pace and momentum. So given that the Fed can decrease rates, throw money at the stock market, it's slightly out of their hands for a change. So being able to predict what's going to happen is a pretty tough one, really. The only thing that I would say is that the more it goes on, the more pressure there's going to be on the downside. It's as simple as that. Unless there is a cure, which is very unlikely, we've been through that before, then you're going to see more of this. The market finding a bit of support overnight, but below the 200 MA now in the daily chart, which has been a while since we've seen this. It goes back to October 19, August 19, but the market bounced off this. And then May 19, you can see how frequent the corrections have been. And then December 18, and then all the way back to, you can see there, January 18 as well, where the market came back and managed to bounce. Whereas this time, it's not different in the sense that the economy, the growth and everything else for everybody is different this time. However, this is different because, that, like I say, this is something else that the Fed has no control over as far as this is concerned. So we'll see what happens. But anyway, this is the move yesterday. It just kept moving and moving and moving, apart from a bounce and then moving to the downside there as well. So below the 200 MA. Didn't even come anywhere close until this point of closing above the 20 bar MA, and then reversed and moved lower. Overnight prices are still volatile. I mean, there's a really good range here I mean, that's 100, 200, 250 point range on the overnight. There's still a lot of volatility. There's still a lot of weakness. The market is currently trading, if you can find them, that's how much volatility there is. There's the DP, there's the 200 MA, still below at the moment, still showing more potential weakness for this market there. So let's have a look at news. News isn't going to make a lot of difference, and there isn't any. Implied volatility, of course, now making some significant gains up, as you can see there, to 24.89. We're getting to a point where the market, volatility-wise, could take a breather. But like I say, we're in slightly uncharted territory, because the more news that we get of coronavirus cases, the more reinforced the pressure is going to be on the downside in the market. So even though we've got 100% increase, or more or less now, in implied volatility, the market could still move lower or get a bit of a breather. And there you can see the same there, big spike up in volatility. Could have a bit more yet, go up towards the 29 area, looking at this. But yeah, we're certainly getting to a point where there's got to be a breather in the activity there. Bond yields, they talk about record lows. They may do as individuals, but the 2 year, 3 month, heading back to the downside, minus 0.20, minus 0.20. Yep, that's right. That's for yesterday. You can see that there, and the bigger picture, repeatable pattern where we go inverted, get a breather, we get the green, then we get the red. We get the red, get the green, and then we get the recession. You can see the recession's in blue. There we get the same red. We had only 1 month, then the red again, then the recession. We've had the red, got the spike, got the red. Just wait for the blue line to put in appearance somewhere around here, and yeah. Recession is en route, I'm afraid, as we said last year when we started looking at this in this chart. It's never failed. Six times, 6 correct forecasts, and it makes sense as well. If the nearby yields are higher than the further out, then there is a problem, because it should be the other way. Okay, let's see what happens today. So look, the market's still weak and moving slightly lower there. So with that, I will finish, and as ever, thanks for watching. See you in the next one.